All right, good afternoon. Welcome to the weekly take on the market. I will be your host. My name is Scott St. Clair. I'm the manager of the premium product group here at Investors Business Daily. Please take a moment to read the disclaimer. The disclaimer is very important. I can't tell you what to buy, sell, hold, how many stocks you should own, whether you should sell XYZ because of this, that, or the other. I know it's a little confusing, but these webinars are vetted for compliance. I'm not licensed. Nobody here at IBD is licensed, but we do fall under a compliance umbrella because we are allowed to trade stocks for ourselves. So we're definitely have skin in the game with you guys. So please take a moment to read this. I'll go through overall market thoughts, stocks to watch, industry groups, not necessarily in that order, and then the quote of the week. So we'll keep it same drill, makes it easy for me. So we lost some bulls and we gained some bears, which is perfectly normal for a market that corrects. We had maybe a 5 to 7% correction on the NASDAQ, and growth stocks tend to correct 1.5 to 2.5 times that. So, the NVIDIAs of the world corrected, I don't know what NVIDIA corrected, maybe 15%, SMCI even more. MicroStrategy corrected 40%. So it's been my favorite term, a healthy correction. I guess it's only healthy if you're not in it. I get the idea of, I get the spirit of the statement, a healthy correction, but nobody wants, I don't want to be in a healthy correction. I don't want to be in a bad correction. I don't want to be in any correction if I can help it. You're not going to have it perfect, but that's the idea. So it's not as extreme as I'd like. It'd be really nice, but I like the steep drop off in the bulls and the increase in the bears. And this is what we want. We talk a lot about sentiment, how it swings from extreme to fear and back and forth, and it works best in this regard. So we've had a little bit of rally off the lows in the last handful of days, and this is par for the course. These numbers are reported, and then the market probably a day or two or three before you actually start to see it in the price. Economics, politics. I like economics. I dislike politics, unfortunately. So I don't go down that road. But they do cross over a lot, and the proposal for the highest capital gains tax rate, I guess in history or 100 years, that would be probably in history, is on the table, and I guess for me, somebody who's never had a long-term capital gain, unfortunately, never held anything long enough, except my house. I wonder how that would play out. But it's funny how, on a side note, I've been in my house, I think, 25 years, and it's because there's no bid or ask. So I probably would have sold it many times before on the way up if I could have. So luckily I wasn't able to. And so having a quote machine in front of you is not always a good thing, in all honesty. So if this were to pass, I don't know what it would mean for the market. It would mean something, though. I think something would happen. Maybe there would be a rush to take advantage of the lower capital gains rate in 2024. That would seem like the obvious thing to do. Like if you had a really large gain in something and you saw this, as you probably would want to do that selling in 2024 at the lower rate, if you're going to sell, if at all. So I thought this was interesting, and I did see on Twitter a lot of people felt like this isn't news and there's no way that it passes, et cetera, et cetera. But these are things out there that influence the market, and I have kind of one eye on it, barely, to be honest with you. All right, so I think that's it for those. Yeah, so let's jump into the indexes. Uh, and you should see a chart of the Nasdaq, right? So you get this kind of waterfall decline, and that's where the sentiment changes. And here, let me turn off my camera in case I'm covering the chart here. And no surprise, the market rallied. So this was Friday, and anytime the market closes poorly on a Friday, you normally get some follow through on Monday. But it's that kind of rule that I've had for a while has is kind of dissipated. I feel like the market almost prices in the Monday downswing. So like in the old days, you'd close here and then you'd open there on the Monday before you'd get the rally, and we just don't get that anymore. Unfortunately, I used to love bad Fridays with good bad opens on Monday. If I was short, I would cover the open, often go long for a rebound, and it would, in this kind of scenario, it would really play out really well. So it's a little tricky. I was, I can't remember if I was even short a stock. The last stock I've been short was Tesla, and I covered that before the earnings just because it had been going down so poorly and was, so I think I covered it this day, which is 422. Uh, yeah, right. That would have been on Monday. So I feel like I did cover it on Friday. I just was wary of the poor close and the fact that that Monday usually doesn't, uh, you don't get that kind of washout like you used to. So the market rallied, and you got the washout here, kind of the shakeout, which is really nice. This is a shakeout on Meta's numbers. Now the market still closed red, but it closed at the top of the range. And so to me, this was kind of the test of the lows right there. And you probably want to, if you're out completely, you definitely want to put some exposure on there. If you're underinvested, I think you want to exposure. I think this is a great risk reward trade when you get this kind of test, because now you can trade against these lows. Markets should not take out those lows. And so you have a very asymmetric trade, risking, 1.5% to 2% on the index, uh, for the chance that maybe that's the low. Anything is possible in this market. This market is very dynamic. It's an election year. There's so many things going on. I think there's a podcast, Victor Niederhofer, who's famous or infamous for having kind of got hurt in the long-term capital, the Asian crisis. Charles Harris talks on him on his psychology thing. He blew up a couple of hedge funds, but his brother was on a podcast and talked about uh, right tail risk, which very few people talk about. So there, on a distribution curve, bear with me here. This is sort of important. I'm kind of going off on a tangent, but this is left tail risk, which mean, like a really bad event, like a crash of 87 type thing. And right tail risk is not something you hear about, but the upside. Like, what if the market really gets going and you're not invested in it? So that would be like right tail risk. And I feel like the market has the potential to make a big move either way. Like I could see it being a bear market if it weren't an election year. I don't know, right or wrong. I'm of the opinion that I think they're going to government to pull out all the stops to prevent the market from going down into election year. I know some people say that's crazy to think that way, but that's sort of the way I think. So you could get, if things become really inflationary, you could get a really big up move, and that would be right tail risk, where you're kind of getting left behind. If you're in bonds making 4%, but you're losing 2% purchasing power each year, and that wouldn't be so good. So bottom line is, honestly, I just kind of play it day by day by day, and I like to think about all these other things, but in the end, it's my my process, my strategy when I'm putting positions on, it's really based on a day or two or three of what I've seen and what I feel like could happen. And then in 3 days, I'll reevaluate. It just works best for me. So today was kind of the spirit of a follow through day. Now, I'm not a big fan of like a follow through day. You're only what? You're not even a month off the high. To me, the follow through day concept works best when you get something like this. You've been going down for a number of weeks to months. And that's when the follow through day, you really want to have some kind of correction to get that kind of follow through day concept. Now, we did break the 10-week line, and we had a pretty good correction in some of the names, so maybe that's enough. But I don't know if the volume is going to support for a follow through day, so it won't really matter. But in the end, I'm exposed to the market. I don't have any shorts. No, I don't have any shorts. I'm not 100% long, but I just feel the leadership is held up well. And a lot of times we talk about buying stocks on pullbacks, but then you get the pullbacks and nobody wants them. And I'm just as guilty of that. So, but this time I was like, well, I'm gonna buy them on the pullback if I want them. NASDAQ, S&P holding up a little bit better, just below the moving average. The Dow, which you don't really watch, and IWM. I don't even watch this, to be honest with you. I just don't see the value add of that. It's just my 2 cents. Across the world, this is the CS 300 in China, broke this kind of little downtrend. If you look at the weekly chart, like you've got 1, 2, 3, this looks really washed out. And if this was the US stock market, I would be wildly over my skis bullish on this. It's China, and so I don't know how to think about it. So I thought about buying Asher. I didn't. I still might, but I do own one Chinese stock for the first time in a while, and I'll bring that up in the stocks thing. So that's acting really well. Well, I should rephrase that. It looks like it's pretty washed out, and there's a lot. And you talk about sentiment. Sentiment is really bad on China. Here's Poland ETF, which I own. Looks really good to me. It's it's a big base. Hasn't done anything for a long time, but if you look at the daily, it's made a move here, and it's above the moving average while the U.S. markets are below. I think there was one esoteric Peru, right? So here's Peru, more commodities based. I don't know if I would buy this Peru one. I probably won't. It's just a little too illiquid. But I like to look all over the world and just see if world markets are holding up. Japan looks okay. It looks very similar to the U.S. market. I think that was it as far as. I feel like there's one more that I was curious about on the international side, but you get the idea. So let's jump into industry groups. Computer hardware peripheral is 1, software database 2, building services, maintenance, transportation equipment, consumer electronics, retail restaurants, semiconductor fabulous. Sometimes it is fabulous. Building heavy construction, making a move, right? 3 months, 93. Currently, or last week was 10, it's 14. I just, I don't see like a really clear signal in the industry groups, but I like the diversity of them. And one thing about this market I think it's fooled people is it's gotten this reputation that it's super narrow, and I just don't know if I believe that. I can name, building equipment, Tidewater, semiconductor stocks, even gold stocks have made a little bit of a move. Copang, CPNG, overseas stocks, C Limited looks like it's bottoming as well. So it just seems like there's a lot, restaurants, Chipotle, there's more to it than meets the eye. I think the market is a lot broader than people want to give it credit for. All right, so let's jump into stocks. And the Chinese stock that I was talking about is JD. And this looks like, I mean, if you're into Head and Shoulders bottoms, this looks like one. And this was a great stock in this time period. The earnings line is still fairly positive. It's not all that exciting in here, earnings and sales, but this, like I said, if this was the US, if this was Amazon, I would be very heavy in that. Imagine this chart was Amazon after the NASDAQ having corrected 80%. It would just seem like a no-brainer. So I don't know. I'm going to give it the benefit of the doubt at this time. Give it a chance, and I do own JD and have for a couple of days. So that looks very good to me. What else? Tech looks like it's holding up really well. TECK. You go to the weekly chart, looks very strong. Now there was a buyout. I think BHP made an unsolicited offer for Anglo. So this stock jumped this week. And I don't know what that says, but it seems pretty bullish to me if they make an unsolicited offer for your business. What does BHP think about their business if they're willing to buy that whole company? So tech is in that space. They have their hand in all the cookie jars as far as commodities. So it's a great way to get exposure there if you want it. And I don't remember last I looked, but I'm fairly certain this is a top 10 position with Duquesne Capital, Druckenmiller's family office. VRT, this really strong weekly action. This has been a great stock. One of my best trades is here and out in here. And I don't know why I didn't go back to the well. Normally I would. One thing about it, the earnings and sales are decelerating for 4 quarters in a row, 24, 18, 13, 8. And that's kind of bothered me a little bit. And normally I put so much more weight on technicals. This is a great example of why. There's somewhere out there, there's probably a massive quarter where earnings are up 80%, revenues up 40%, and that'll probably be the time to sell the darn thing. So that's why technicals are so much more important in my book. But this is a great leader. And what I really like about this is it gapped up on this day on earnings, gave it all back, and it looked like a kind of a nasty reversal day was in store. Like, look at that on earnings. That looks like potential toppy, and got back pretty much almost all the gain the next day, and then even exceeded a tiny bit today. So I have to say that is very good action, surprisingly to me, but that's hard to argue with that action. NTRA, I don't own VRT. I think I said, or maybe that's implied. So it comes down to the 10-week line. A lot of times we talk, oh boy, if it's rallied, boy, if it ever came back to the 10-week line, I would buy it. That was kind of the way I thought about it. But it's hard, right? The market's selling off at that moment. But if you don't have that much exposure like I had, then it's okay I could put a little bit of risk on. So I bought an NTRA off the 50-day. Yesterday was kind of a tough day. But really turned out to be a really good shakeout. And good earnings and sales. Earnings in, what's that, 6 days? We'll have to see how that plays out. Gold stocks, AEM announced earnings today. I did have a position in AEM. I sold this morning into the earnings. It's kind of what I do. We'll see. It's not doing anything wrong. Looks like a little bit of a reversal. That's just kind of how I buy it. I buy it here, and somehow survived all of this. And I just think it was short term a sell. NVIDIA. I did have a position in this today, but got out, unfortunately. Really, it looks like a good shakeout. That looks like a really good shakeout. So you see how the market's starting to give you little clues that maybe things aren't as bad as it seems. CrowdStrike, not as good as NVIDIA, but same kind of concept, almost covers the entire weekly move down. I thought about buying that one today. I didn't, but that one is high on my watch list. SMCI, which I would not buy most likely, but I watch it just to see how stocks are doing. Bad break, should go lower, did for half a minute, holding up. It looks broken to me. I think SMCI is a void. There's better stocks in this area, NVIDIA, and there's another one I'll talk about that I think are better potential if you're trying to get kind of the AI play, but one to watch for sure based on leadership. Meta, so you have kind of an island top, important stock for the market. It had a bad day on earnings and still hasn't made a new low. So longer it can hold, not make a new low, the more likely you've got, I don't know if I'd buy Meta, but at least it gives you an idea on the market. Microsoft announced today, not much there. It's big, liquid. I watch Microsoft, but gosh, I can't remember the last time I traded it. Google, so pretty good action. Gaps up, quarterly earnings up 53%. Not too shabby. India is the other market that I wanted to talk about that I forgot, but MMYT, not on too many people's radar. Kind of tough, right? Where's the base? There really hasn't been too many bases. You kind of just had to buy it on a pullback and know what you own. Buy off of the 10-week line. But this is leadership, kind of a good proxy for overseas market if it's going to hold up. ETN, which is in the kind of building electrical power, an area I really like a lot. If AI is for real, we're going to have to build out this grid. We're not even close. But this is a lot like Nuterra, came down, touched the 10-week. Nobody wants to buy it. Boy, if it just pulled back to 10-week, I'd buy it. Then it pulls back to 10-week. You don't buy it. I didn't buy it. I wanted to, but I bought some other stuff. And but looks very good, very strong company. It's not going to set the world on fire. Maybe it doesn't double from here, but why couldn't it go up 10, 20, 30%, something like this? I bought CEG instead, and they're kind of one and the same. We'll see. So this is another one in that power area. And then last but not least, today, A-Lab was just gangbusters all day. Really strong, broke this kind of downtrend line that I had. I do have a position in this one. and it's new, it's AI, it's got quarterly earnings and sales. So a great proxy for the market. If they can get this to go and work, that's a really good sign on the overall market. It's not too often you get IPOs, but this looks very like eBay-ish and all that. Now, maybe I'm dreaming. I don't expect it to do kind of what eBay did, or maybe I'm hoping. But like, if you go back to eBay, like in 1998, and let's go like December now. This is a different time frame, much stronger. Bear with me here. I can't get this typing right. So what day is that? I think October, something like that. So kind of this IPO U-turn or something like that. Boom. So eBay was up 46% in one day. No, A-Lab's not going to do that. And it was up 12% the next. So it was up, almost 50% in a few days, but it's got that kind of look and feel and power of that, right? So it runs up, you get this IPO U-turn. And I know the IPO base is way up here at at 95, but to me, if you go like intraday, it cleared most of the resistance here. Like it spent very little time up here. There's very little trapped holders at 85 or higher. So this looks like a clean breakout. Let's see. It's closed so strong. I actually think it probably opens lower Monday, which would be fine. But if it can stay kind of here for a couple of days, then it give you another buy point, which wouldn't be too bad. So I think the market is fine. It's hard for me to be bearish here based on the action. I'm not over my skis long, but I am pretty long, and I don't have any shorts, which is unusual. I just don't see a lot out there. Speaking of shorts, I think I talked about Tesla, but Tesla's report was, very pedestrian at best, and I'm just being kind. It really was a lousy report, but the stock had gone down so much, and so for it to get this kind of bounce on bad news, that's not bearish. You can scream from the rooftops all you want about how bad the report is, but when stocks don't go down on bad news, that's very bullish. And if stocks don't go up on good news, that's very bearish. It's just kind of like the VRT thing. If it had given back all that move with the guidance and everything they talked about being so great, that would have been bearish. So that's why you want to watch these things and see how the market is voting. It voted bullish on Tesla. It voted bullish on VRT, at least so far. So that's the evidence you have. The evidence could change tomorrow, Monday. It could change Wednesday. It could change in June. I'll change then. I think that's it as far as stocks. All right, so let's go to the quote of the week. I was reading this book called Moneymakers. It's kind of like Market Wizards, but for British investors. And I believe it's probably copyright 1997. But sometimes I like these old books. And Colin McLean, Scottish Value. The great thing to remember is there are always opportunities around. I sort of feel like that. I feel like there's always the potential for some stock out there to do something. And for me, even like the short side, I always think like if we get into a really bad bear market, there's potential for me to make some good money on the short side as well. We have to remember the market averages are just that, averages. Unless you want average performance, there's not much point focusing on them. So this is a little controversial for sure. Bill would say the M is so important in CAN-SLIM. I kind of lean this way. I think the M is just, at least for me, it just fools you. It looked bad. Like people on IBD Live on that day where the market broke, we're talking about like how to get short that Friday, looking for shorts. It's too late to look for shorts at that point. If you want to get short, start looking for shorts this weekend, because if this market rolls over, the perfect time to short them will be Monday or Tuesday. You've had a rally off the lows into the moving averages. That's how you short them, because then if you're wrong, it jumps above the moving averages. You risk very little. Shorting when they're free falling like that, it works probably 1 in 14, 15 times. You're really looking for just the market to break wide open, COVID type bear market, 87 crash type market. I'm not saying it can't work. It's just your probabilities of that type of thing happening are really, really small. It's better to look at individual cycles and patterns within each individual company, which don't all follow the same trend. Some stocks are doing well in a bull market, some stocks do poorly in a bull market, and vice versa. It's a lot harder to swim against the stream, but not impossible. A lot of them are doing good things in bad markets. And there's a lot of turkeys out there in bull markets, right? We don't buy a clean sweep room, all the names. A more consistent way to make money is to buy individual stocks and try not to guess the market's timing. So think about that. I like individual stocks because of the asymmetry. If I'm wrong, I'm risking a certain amount. So my risk is static most of the time. You could get a exogenous event where you take a larger than normal loss than you expected or wanted or had planned. But most of the time your risk is static, but your upside is, potentially unlimited if you can hold on to them correctly, which is I'm not very good at, but I'm trying to get better. And it seems like yeah, in the last handful of years, I have done a much better job of doing that. Okay, so 800-831-2525, market surge at investors.com. Next week will be you'll have Arnie and Harold with the Stay in Step on Thursday. So I will be off the video duties next Friday. I'll be back to you. What's that? Maybe like May 7th or something like that. Have a great weekend, everybody. Bye bye.